When most people think about buying expensive assets, they imagine things like luxury homes, private jets, or maybe even a sports team. Very few people ever stop to ask whether it's possible to buy an airport. After all, airports feel like public infrastructure. They're massive, heavily regulated, and essential to the economy. They seem like the kind of thing that governments build and operate. But that's not always the case. In fact, some of the world's busiest airports are either privately owned or controlled by private investors. Over the past few decades, airports have become one of the most sought-after infrastructure investments in the world, attracting billions of dollars from pension funds, investment firms, and wealthy institutions looking for stable long-term returns. This raises an interesting question. If you had enough money, could you actually buy an airport? The answer is yes, but it's probably not what you're imagining. To understand why, we first need to understand what an airport really is. Most people think of airports as transportation hubs, but from an investor's perspective, they're businesses. Every year, millions of passengers move through major airports, and every one of those passengers represents an opportunity to generate revenue. Airlines pay airports for access to runways, gates, terminals, and maintenance facilities. Every time a plane lands, takes off, or parks at a gate, fees are involved. But aviation-related income is only part of the story. Modern airports have evolved into enormous commercial ecosystems. Parking garages, restaurants, retail stores, duty-free shopping, advertising, rental car facilities, hotels, and property leases all generate revenue. In some airports, non-aviation income accounts for a significant portion of total profits. That's one reason airport operators care so much about passenger experience. The longer people stay inside a terminal, the more likely they are to spend money. This combination of predictable traffic and multiple revenue streams has made airports attractive investments for institutions seeking reliable cash flow over long periods of time. So what would it actually cost to buy one? The answer depends entirely on the type of airport. At the lower end of the market, there are small regional airports that primarily serve private aviation, flight schools, or limited commercial traffic. Some of these airports have been sold for amounts that, while substantial, are still within reach of successful entrepreneurs or small investment groups. Once you move into larger commercial airports, however, the numbers increase dramatically. Regional airports serving hundreds of thousands or millions of passengers per year can be valued in the hundreds of millions of dollars. Major international airports often reach valuations measured in billions. A useful example is Sydney Airport in Australia. In 2022, a consortium of investors completed an acquisition valued at more than 20 billion Australian dollars. That transaction demonstrated just how valuable airport assets have become. Investors weren't simply buying runways and terminals, they were buying access to decades of future cash flows generated by one of the country's most important transportation hubs. Perhaps even more surprising is the fact that airport ownership structures are often incredibly complex. While some airports are fully government-owned, others are operated under long-term leases, public-private partnerships, or investor-led consortiums. In many cases, ownership is divided among multiple organizations, including pension funds, sovereign wealth funds, infrastructure firms, and institutional investors. This means that buying an airport is less like purchasing a house and more like acquiring a major corporation. Of course, if airports are such attractive investments, why doesn't everyone want one? The answer is that airports are extraordinarily expensive to operate. Runways must be maintained to strict safety standards. Security requirements are extensive and constantly evolving. Terminal buildings require continual upgrades, repairs, and modernization. Staffing costs can be enormous, and airports operate within one of the most heavily regulated industries in the world. There is also the issue of risk. Although air travel has historically grown over time, airports are not immune to economic shocks. Recessions can reduce passenger demand, airlines can fail, geopolitical events can disrupt travel patterns. The COVID-19 pandemic provided a dramatic example of this vulnerability, as airports around the world saw passenger numbers collapse almost overnight. For investors, airports represent a trade-off between stability and capital intensity. They can generate substantial revenue over long periods, but they require enormous upfront investment and constant operational spending. So could you buy an airport?